Welcome to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have. For those of you who are new, welcome. This is my brief bio. I think the difference between TradeSpoon and maybe some of the other services out there is that we have a team of financial engineers that have PhD in physics, economics, computer science, that are building models, right, using latest advances in neural networks and AI to generate signals, right, long-term, short-term trading signals, and then I use them, and Keith is using them to trade in a live trading room environment, which is kind of unique because usually you either find signals or you find people who trade, but not both. Disclosure is very important. Right? Stock and options always has the risk, and there's always a question of suitability. If you're new to trading, I encourage you to visit the link so you can understand the risk associated with trading stock or options. And you can pause the screen for the remaining of the disclosures. I mean, the goal for everyone is to become a successful trader, disciplined trader, confident trader. That takes repetition, right? Confidence. I encourage you to have a trading plan. Always write down all of the rules that you have for trading, and then document trades in the journal. If you don't keep a journal, try to do it for a few months, for 2 to 3 months, and see if you see a difference. Usually you see a significant difference if you actually record, because if you don't remember why, if you don't record, then you don't really know why you got into the trade, right? By the time you close the trade, you don't even remember why you got into it. What was the target gain? What was the stop loss? Why did you get into it? At what point did you want to sell? Decided to close. So you need to have that information so you can go back and reread your journal, right? Reread your successful, unsuccessful trade and adjust your plan. In the pre-market, in the pre-trading routine, before you place the trade in your journal, I would write down your rules and as a check marks, right? So one of the rules is portfolio drawdown, number of positions, position size. Another rule is probability of success versus return on capital, right? Trading is about probabilities, right? Distribution of possible outcomes. Market can break, continue going higher, market can pull back. You know, you can look at the probability calculator and see what is the probability of stock moving higher by a certain percentage, and you structure your trade that way. So that would be something I would put in journal. But the most important, risk management. If you're new to trading, I encourage you to only start with 4 positions and maximum drawdown of 2.5%. Know your maximum drawdown is 10%, right? Especially if you're new to trading, anything outside of 20% is this where you have this fight or flight response and you get nervous, right? And this is where you want to avoid. We all go through this, whether you trade in Bitcoin or you trade in Forex. Everybody goes through this, right? Because you don't do this positive and negative visualization, right? You buy Bitcoin because you think it's going to double in price, but what if it drops by 50%? You don't go through that exercise mentally before you get into a trade. And as time goes on, then you realize you have to look at both scenarios, right? There's always a positive scenario and there's a negative scenario. You know, by nature, we usually try to avoid negative scenarios, but for trading, it's important to do that. So I encourage you to be long and short the market at the same time, right? With certain bias, right? You can have more long positions, you can have more short positions, right? Whether you trade in options or you trade in stock, you know, you can have weak stocks, you can short them, and you can long, you know, strong stocks, or you can hedge your stock portfolio by one of the 4 positions, have inverse ETF, right? But this is the way, this is, you know, very important. Please type in your questions because I do have to leave around 10 o'clock. So in the next 20 minutes, I want to make sure that I answer any questions you have about TradeSpoon subscription or any other questions. So let's jump into this. So market is actually giving up all of the gains, right? That's, I mean, we'll see what the closing is, but we had really strong unemployment data, right? Like revised data from the last month, soft landing, everybody's super excited. We're back to 4.1% unemployment rate, right? This is updated. Created a lot of jobs, right? A lot of jobs, a lot more. The average, the trend in average went from 100,000 jobs to 185,000 jobs. So very strong economy, right? Soft landing, Fed cutting interest rates, very important question is, why is the market down, right? So, one explanation is VIX, right? VIX is at 20, so people are still concerned about elections. They're still concerned about war in Middle East. They're concerned that the market is trading at historically high multiple, and potentially, AI, theme is not enough to push market to new all-time highs, at least not until the elections. And usually going into elections, people are nervous, and you do have these short-term pullbacks. So it seems like market is exhausted. We have, it's trading in the box, right? Fred is not here, but one of the patterns, right, is the box, right? You have the clear breakout of all-time high. You had July, August. Finally, in September, we broke out of the all-time highs, and we've been trading in around this. On the negative, positive news, is just trading in the sideways. At some point, you do have breakouts, right? You have a breakout to the upside or break to the downside. You could have both, right? You could break to the downside and then break to the upside, or break to the upside and then down. But October, usually going into elections, from a personality point of view, and if you review last 20, 30 years of elections, you'll see that usually September is bearish and October is bearish. September hasn't been really bearish. It actually broke to new all-time highs, but it's probably flat right now, right? So September is flat, and now October, at least next couple of weeks, you could have, maybe revisiting 50-day moving average. Or, unemployment, people are going to digest unemployment data. Next catalyst is our earnings, right? We have earnings next week. Delta Airline on Thursday. Friday, we're going to have JP Morgan, Wells Fargo, Progressive, and soft landing. Companies are printing cash, revenue is growing, and we have a break to the upside. So going into the end of October, going to the end of the year, you do need to kind of go through these what-if scenarios so you can prepare for the market. In terms of the model, short-term model sees market is overbought. It's actually negative, right? This ran before unemployment data. Obviously, we had a positive surprise at the open, 573, but now we are, back to kind of being flat. So short-term, small downtrend model sees maybe reaching 560, maybe even 555 to the downside. If you zoom out, if you're not analyzing next 10 days, but you're looking at November, December, going into January, the medium-term, long-term uptrend is still intact, right? We could reach in the next few months 580, we could reach 590. Model still shows that the relatively, although smaller momentum, right? These vectors are much smaller than they were, 6 months ago or 2 months ago, but still positive. They haven't turned negative. So usually that means that the positive momentum is there for longer term trading. Short-term trading, you could have a pullback. Gamma exposure, right? We've done this in the live trading room, actually same chart stays. I selected October 18 monthly expiration. I selected next Friday and November expiration, right? This is all positioning and where all the gamma is. The October gamma is growing, right? We went from 2 billion, 4 billion, now it's almost $7 billion worth of gamma exposure between puts and calls. September had 20 billion, so it's still a relatively low position, but it's growing. People are hedging their positions. You can see VIX is at 20, and even though market is at an all-time high, and it's reflected in this gamma. So going to October 18 expiration, which is in 2 weeks, we relatively well positioned. November, obviously very small. Again, it's only $3 billion. So once we have October expiration, which is 2 weeks from now, again, that becomes kind of a vulnerable time. But looking at the estimated move analysis and positioning, obviously 560 expected move, right? I'm looking at the expected move, 560, based on this 1011 and 1018 expiration. And then I'm looking at next level is 550. On the upside, there is a lot of gamma on this 570, 575 level, right? So before we break to at least 580, we need to clear the 570, 572 level, right? And that's where the market is stuck. So let's go over those scenarios. One scenario, positive news, market is not rallying, maybe escalation war in Middle East, maybe earnings season is not as strong as everybody anticipated, or maybe just the market is at historically high multiples that's not warranted based on the earnings result, and you have at least revisit a 50-day moving average, 550. All right. The other scenario will break out and go to 580, right, or above those levels going into elections. So this is scenario one. We're going to 580, 590, right? Maybe elections, prior to elections. Scenario number two, we go to the 50-day moving average, right? Those are the two scenarios. We're talking about elections, right? So the next 4 weeks. And then scenario three, scenario one, we break out 580, right? Scenario number two, we're trading in this range, 580, 550. Scenario number three, we break through the 50-day moving average, go to 200-day moving average. So how many of you think, one, we're going to break out and trade above 580 before the elections? How many of you think we're going to trade between 580 and 550 going into the elections? And then how many of you think we're going to break below 550? So this is November, and then this is January. Same thing with January. How many of you think we're going to continue on higher? That's scenario number one into year end. Scenario number two, no, we're still trading in the range. And scenario number three, we revisit 200-day moving average by end of the year. 1, 1, 1, 2. Okay. Andre, Brad, Don, Luis, Mark, Peter, T. So yeah, so I think November, I'm going to go with 2, right? End of the year, I'm going to go with 1. I think the uptrend is intact. NVIDIA, that AI theme is going to continue probably for the next year or more. So long term, I still think 1 going into the end of the year. But prior to elections, from seasonality point of view, looking at the reaction from today, I think we're just going to be trading in the range between 550 and 580. Any questions? So how do we help? We do have different tools, right, that you can use to generate signals. One is these models based on neural networks, based on learning, inference engine, just like any other AI. It trains on the data, it analyzes stock movements, earnings, and then makes predictions. So you have active trader, which is short-term signal. You're thinking about days. Weekly trader, you're thinking about weeks. Monthly trader, you're thinking about months in terms of how long you're going to hold the position. So if you're thinking about days, active trader, NVIDIA, it gives you specific entry prices, right? At which price you enter, at which price you exit. You're looking for 1%. Right? So strategy A, you look at the predicted low, and strategy B, you look at yesterday's close. So for NVIDIA, you can enter at 118 or 122.85. And you can look at NVIDIA stock today. It was as low as 121.83. So if you waited for 122.85, you would enter that trade. And actually traded NVIDIA today, right? So these are the example NVIDIA. So right, so I did enter NVIDIA, and I'm trying now to exit at 126 and at 129. Market is overbought, so I encourage you, if you thinking about these trades, then trades small, right? Because it doesn't break this trend, and you hold in position, let's say for the next couple of days or a week, we could pull back to the 50-day moving average. But that's the signal for today. An idea again in this example, if you enter at 118.35, you exit 119.53, basically 1%. You're looking for 1% move in the underlying stock. and you break it down to 2 entry points. And the way usually I propose is that you don't want to risk if more than 2.5% of account value. If you're doing holding overnight, day trading less than 1% of account value. If you're a day trader, if you hold in position overnight, then 2.5% per position is at risk. And then you can use these guidelines. If you're risking 1%, $10,000 account, you shouldn't be down more than $250. So risk management is important. Number of positions is important. Right? If you knew, I would just say 4 active positions at a time. Sometimes people ask me, stock forecast toolbox, it doesn't matches active trader. Stock forecast toolbox is one model. Active trader is a combination of multiple models. So sometimes stock forecast toolbox can show that NVIDIA is down, but active trader shows that, as a short term, it's an up signal, right? So depending on what period of time you're analyzing, you can, NVIDIA could be up in uptrend long term, but in downtrend short term, right? So that's kind of how you would interpret that information. And same thing, you could, people, if you're looking for option ideas, it's the same thing. Options are derivative of stock. So if I'm looking for 1% moving underlying stock in NVIDIA, $1.20, if you're buying a call, 117 call, weekly call, same thing, you would look for $1.20 move in NVIDIA. If you're doing Delta 70, then I would look for, not $1.20 move, but $1.20 times your Delta 70, right? Because it's not going to move 1-to-1. But the idea that people ask that question often, like, when do I get out using option? Same thing that using stock. All right, so that's the example of the option trading. So that's active trader. You can use stock or options. The idea is short term. You call it for a couple of days. If you do day trade, you can day trade using these parameters. Weekly traders, same idea. Just it's a different model that analyzes more time, right, and gives you longer term signal. The idea is to hold them for weeks, right? Like eBay is one of them. That's been a strong uptrend. So these are the signals, and the active trader updates every day, weekly, monthly trader updates on Sunday. If you want to know what I trade, Elite Circle, right? In Elite Circle, we have morning bell, closing bell. Keith and I managing these sessions. This morning I traded NVIDIA, so I'm still long NVIDIA. You can see I'm long NVIDIA. I closed the QQQ put spread and triple M, right? Triple M. I'm in triple M position. So those are some of the positions, both combinations of options and stock trades. And you can participate live in the morning bell, closing bell. You can enter your phone number and get alerts. If you just want stock trading, it's Robo Investor. If you just want spreads, it's a premium portfolio. So we also differentiate. And Elite Circle, you have a lot of signals. So especially if you're new to trading, you want to figure out, are you a stock trader, are you an option trader, short-term, long-term signals. So you will have to pick and choose. If you want less information, then Robo Investor or premium portfolio. Premium portfolio is one trade idea a week. Robo Investor is one trade idea, every other week. So, if you don't want to have to deal with a lot of signals, but also have exposure to the portfolio, then you would choose that. I mean, we do have other tools, seasonality, right? From seasonality point of view, spiders. Usually, second week, after September, you have this pullback. We haven't had this pullback yet. But then after the elections, usually from seasonality point of view, you do have a strong rally into the end of the year during these election cycles. So that's seasonality. What else? We talked about stock forecast toolbox. We do have a YouTube channel where you can participate in live trading on Wednesdays. I encourage you to join. I do trade, some of the trades I do earnings, right? So an example was Nike this week or Micron last week, where I look for these sometimes asymmetrical returns, right? By buying butterflies, more complicated strategies. sometimes it's a condor, sometimes it's a butterfly. So two-legged, three-legged, four-legged strategies where you can structure your trade where you buying a spread for 32 cents and trying to close it, 100% return, 200%, 300% return. And options allow you to do that. It's still, you have to look at the probability of outcome, but for the most part, this would be one way you can participate, especially if, expensive stocks, where if you buy 100 shares of Nike, you have to invest $7,500. Here you invest in, $32 in one country, right? So a lot smaller investment and still participating in the trade. 10-year yield, big jump. Why? So today we had unemployment data. It's much better than expected, right? So the idea that, well, Fed, everybody expected 50 basis point cut this year. We already have one in September, and the expectation that we're going to have another 50 basis point cut and 25 basis point cut. Now with such a strong employment market, the 50 basis points is probably off the table, right? So Fed will cut rates at a slower rate, and 10-year yield, 2-year yield is responding accordingly. And the market is actually down, right? People are, still positive, but spiders are slightly lower, and TLT is actually significantly down 1%. Was the idea that, again, potentially Fed will not cut as aggressive behind the bull curve, and inflation will come back, right? So, and market is overbought, so that's kind of the thought process. But this is why you see VIX is still at 20, even though market is making new all-time highs. VIX is still at 20, and 10-year yield, significant move to the upside. Significant move to the upside. It's still in downtrend. I think it's going to remain in downtrend because Fed basically don't fight the Fed. They said they're going to cut rates, so maybe it's not as aggressive that people want, but nonetheless, the trend is to the downside. Thank you, Mark. Any other questions? So let's see what else in terms of some of the trades in the past. So I closed the QQQ. I'm in 3M energy, right? So escalation in the Middle East, right? And you can see that crude oil significantly moved to the upside, right? It bounced off these lows. On Saudi Arabia, OPEC said they're going to increase the oil production despite the global demand slowing down, and news from China, and crude oil is up, and the Middle East, right? So, and China reopening, this not reopening, but that's additional strong stimulus, and you can see stocks related to China are significantly higher, right? Copper, your copper of the world, silver, Wind Resort, Caterpillar, stocks that have exposure to China, you have these vertical moves to the upside. So broadening of market participation, that usually also a positive news. Any other questions? All right, it's 9:58. If you don't, unfortunately, I do have to leave. I have a conflict. So if there's no other questions, then I encourage you to try Lead Circle, right? If you haven't started, try Lead Circle, so you can participate in live trading room, build a trading plan, know where, how to determine the risk, and obviously have a lot of signals, that you can trade. And then this would be a very good learning experience if you want to learn how to trade. Or if you're a trader and you have a trading plan, then obviously, you will have exposure to a lot of signals as well. So that's the Lead Circle. Obviously, if you don't need to have access to live trading room, then I would encourage you to start with these based on how long you usually hold position. My favorite is probably Active Trader because I am more of a shorter term trader. So Active Trader, but you still have weekly and monthly trader if you're a long-term trader or investor. Any other questions? Peter, Mark, Kevin, Don, Brad, Andre. All right, guys, thank you very much. Have a great weekend. Thank you for participating. Short term, I think, I would watch. I mean, you could see Bitcoin not going anywhere. It's weak, right? That's usually one proxy. Nvidia also kind of struggling to break to the upside. These are, small caps are not breaking out. So I think short term, I would not chase the market. I would wait for pullbacks and buy and pullbacks and buy and pullbacks. After the elections, I think we will have the rally will resume. But before the elections, you probably want to be market neutral. Market neutral would be my approach. All right.